be giving a status update of what models that I'm occupied with, aka methods, because it's not really a model in terms of like, it's like one thing that you look for every time. Like, it's the same set of protocol. Like, it's the same protocol slash set of steps that you take each time, like conducting a top-down recent bar close analysis or top-down time frame recent bar close analysis to decipher to discern what sort of intent to trade market participants have relative to like wider, larger time periods. I don't even know where this blue line's here. I'm just gonna get rid of it. It's been there for ages. I was just keeping it because I thought I probably meant to go back to something around this point, to be honest. But yeah, whatever. And so like for example, like this so basically it's, the region of the close shows you like what sort of intent traders have around this region. So like the region of the fucking 9-month bar close is going to be huge in the context of a intraday on the context of on an intraday basis, right? So like you're determining what sort of intent to trade market participants have at this price region. Look to that right, because my price scale's on the right, from the closed region. So it's like around the closed region. So it's like from about where this level is. I don't know what this level was for, but it coincides with coincidentally coincides with what I'm like referring to like around like this is like the outermost proximity where like from that blue line to where my crosshair is price level, where like you can expect market participants to primarily favour pairing up with the sell side of the market whilst the market sat within. It doesn't mean that's going to be the only side ever interacted with, but primarily whilst the market sat within this region and in this duration of this bar, aka 9-month time period, you can expect the market to be primarily driven to down here, based on how market participants are poised to trade the underlying product from this point down to, I would say, around here, just around this region. And that's also like determined by the strength of like how traders traded here, right? Like how intense they had like paired up with X side of the market, in this case the bids, over the course of this time period up to the close point. Now from like the market from this point at this point in time, where the market was most recently sat at is like the region that you're assessing from up to a point to the close. Like where this is the close, right? This will all make sense in the first like method in a sec, and I'll quickly whiz through an example. But like this is where the market's currently sat at now. Where most recently the market's been sat at, like within the context of this bar close, it's been like around about here. You could maybe just extend this box a bit higher, just for this example case. I will. So this is like the region, off the close, and then but like this bar really close as a strong bearish close up, and the sort of intent that was exhibited within this time period at this price region from like here down to all the way here, it lasted up to the close region. Now these prices that are here are similar all the way down to about here. So you can and look what happens, like this oops, I thought I just clicked on another market there, like my down button. You can see this time and time again. Like look at here, wick rejection at the lows, like that you can see that primarily throughout this time period, market participants were inclined to pair up with the bids at all this region. They primarily saw the prices that were available on this occasion, and it's also particularly relevant to the participants who were operating on this point at this point in time, because for all we know, I'm digressing a little bit here, but the participants operating here, if they had the chance to operate here, they might have been buyers. But on this occasion, no. They saw these prices. If you look, always trying when my pointer's here, I'm also looking at here too, at what prices this are, because this is the prices where the underlying product can fucking trade, right? I'm not some guy who's like, oh, price buys. Like, what the hell does that even mean, right? Nah. what they're referring to is market participants interacting with the offers placed at the whatever prices they are, and whatever amount of contract quantity is placed on the offer, and they are primarily buying each of those offers up, and then obviously the last traded price reflects the current price. It reflects the current is what's reflected in the current price, and so therefore if they're buying up all the offers, trading at all the higher prices, they're gonna naturally bump the price up, aka trade the price higher, right? Or trade the price of the underlying product higher, because if they're buying up each of the offers at like 1 and then 2, well the price will be at 2 because that was the last traded price. If someone then trades up all those, if someone buys up all those offers at 2, and then the offer's going to lift to, let's say, 5, someone buys up all those, the price is going to tick to 5. If there's a remainder left, and the contracts then match up at the next best offer, which is at 8, they bump the price up even higher, so you get the gist, right? But anyway, here on this occasion, you can see what sort of intent lasted up to the close and what sort of intent was exhibited around this region. You can see that the way traders interacted with where the market was sat at on this occasion, they started to reject trading on the sell side at this region. And this region, it's kind of like one-to-one, so to some degree anyway. So it's like, for example, if there's it actually is, now that I think, kind of like one-to-one. So like the extent to the market wick rejected here, it's also like the context of what pushes in place. So you got like consecutive bar push here. It's like right at the overextended extreme region. It's also the same as the in-play arm push on this occasion, and you're like wick rejecting the very low overextended region, and this sort of region up to about the whole price digit around here. So you can see it's go with, well, it would be 107050. That would be the whole price digit. You can expect market participants to be inclined to interact with the market primarily on the buy side over the next 9-month time period, in this case because it's relevant to the time frame being looked at, up to about here, right? And so that's the same here, and so therefore if you then drop, let me just see if this is going to transfer to a 1 hour chart, because this is going to be crazy. This is going to be a big box, well, I think anyway. So it's in effect from January. And also, it is also applicable. So like from January, if the market's up here, they're supposed to still see these prices on this occasion as worth to sell, up till at least here. Like from this point after, so it's like around this point and after. It's not like exact this price, and then you're not religious with things. Like in terms of like so cut and dry. It's like this or nothing. Wait, what the hell? What's this trade? I don't know what trade. I don't know what this is. What criteria this is. I don't know what trade this is, to be honest. What criteria it's based on. But anyway, it's pretty interesting that, because I have noticed that these push 2 points, in this case with the 9-hour chart, act as support and resistance levels, and as you can see, it's pretty nice. And obviously, as I just did mention, it's not to the, like, we're not cut and dry and religious to the point and then it's over. Like, you can see this would have also been a valid point, like if you've seen this reaction take place right at the outer bound proximity of this region of prices where the market was poised to trade to, and as you can see, it does, and it actually does within like the first day of the year, or the first day of this next 9-month bar, which is pretty insane, to be honest. Anyway, yeah, so it's like on this occasion, how our participants operating on this occasion poised to be inclined towards interacting with what prices the underlying products available to be bought and sold at. Literally. So anyway, with that being said, we'll just literally break down today of how I'm doing it. So as I also said, I did digress a little bit, but what I'm going to be doing in this video is going over like the 3 methods that I'm occupied with, right? So this is literally today's like when we turn up to euro and pound as of 7 on the new week. What we do is we're given a very wide time frame bar close, which is the weekly on every given day, and this weekly bar is also kind of still like, like relevant to look at. You know, again, like start from the weekly, even on the Tuesday. And so as you can see, like how market participants interacted with the market at this region of prices relative to the region in general the market was at. So like from here down to like here and up to like here, how they were interacting with the market prices on this occasion, and how they're probably going to be inclined to interact with the prices in this region based on the most recent bar close way up to the close, and what sort of intent to trade with the market price contract placed at the market prices that led up to the close lasted up till the close on this occasion. And also pair that up with the context of what consecutive bar push is in play. You can kind of see it's like an up close, it's a consecutive up close bar push, which there's no real sign of wick rejections unfolding yet. You know, I mean, here you did kind of have a bit of a wick rejection right at the high region of a consecutive bar push to the upside, but overall it was just kind of a still nice up close bar. But this wick rejection was a bit iffy, to be honest, relative to like this consecutive bar push amount candle quantity, and then this amount, you know, it's a bit more candle quantity, and then you got this like nice wick rejection. Even though like it's just experience based, to be honest, that I'm considering this as like nice. And as you can see, it does follow suit with something, but then this bar close kind of just closes in tandem with the consecutive bar push what's in play. So, but then, you know, assessing this region, it is likely that at least up till around, as you can see, 17,100, they're likely to maintain a bullish bias. And then anyway, we'll drop through the higher time frame looms. The reason why, and there's none on this day, I'll just double check. Yeah. The reason why I call it a higher time frame loom is because it's like the 3-day bar close is a large period of time, right? Which, if it has a prominent direction, that you know, there's been a certain sort of interest around the region of the 3-day bar close, and there's like a strong interest and intent left and still residing around those prices with regard to how traders have been seen and inclined towards trading the underlying product over 3-day time periods, and that's still resting on this occasion as of the next bar, you know. And there's like a strong intent point and like poised to take hold and therefore facilitate a price movement as a result of what trends poised to go on. You know, that's that direction might not be visible on, for example, like next step lower time frames, right? But that direction looms in the background of, regardless of however all other time frames are set up. And ideally, what you want to see is all the other time frames be in tandem with the loom, right? And that can be like, for example, and so therefore you're like considering the way that each time frame is supposed to bar close. So in this case, the next step lower time frame is the daily. You're considering how that next step lower time frames bar close in the context of what I'm pushing in place. So in this case, it will be poised for downside, which are marked up, but then also in the consecutive bar push lens is also kind of poised for higher. It's not a nice bar close, but it is kind of okay in the consecutive bar push lens, on top of what loom, in this case the weekly, like the extent to which that loom is in place, right? But then as of the 12 hour, this level should actually kind of be pink, because I would have been aware of this level relative to the daily context, but I wouldn't have marked it unless the 12 hour also cooperated with the daily, right? Anyway, the daily was like the reality of how the daily was set up and what sort of intent went on within this region on this most recent occasion with regard to how traders were inclined towards interacting with the market relative to daily and 12-hour time periods was still in effect. The reality of it was backed up with the 12-hour that, yeah, okay, there possibly is some bearish intent here. So then basically what I was kind of expecting after dropping to the 9-hour just like a few minutes before 7 was this market to reject this weekly level. Like I did say at the start of this video, these push 2 points act as support and resistance. You can see here, but like the real-time ones, because obviously some of these levels would have acted as support in the past, but these are future levels, right? These wouldn't be. There was no data here, like as of here, right? And so that in terms of like there was no info with regard to how traders were willing to accept the pairing up with the contrast best bid best offer at this region, right? There was no info, and so therefore there's no insight that we can possibly obtain that would lead us to any conclusions of what sort of price action was likely to unravel as a result of like what sort of intent traders were poised to have at this region, right? I'm just going to lock this video in.